Is the market crashing? Are prices still going down? Is anybody even buying homes anymore? What I'm about to show you indicates some market positivity that might just surprise you and maybe a market turnaround. It's the February 2023 Sacramento real estate market update. Let's go. Welcome back to my market update. So if you've seen my last ones, you know that I like to start off with this website, Mortgage News Daily. I'm not a loan officer. I always preface with that. So what I like to do, and I look at this site almost daily, I like to look at Mortgage News Daily because it surveys mortgage brokers from around the U.S. to see what their mortgage rates are. So this number here, and hopefully you can see my cursor near the top of the screen, 30-year fixed rate. That's basically the conventional rate, 20% down, I believe. And again, you don't have to put 20% down to get a mortgage. There's first-time home buyer assistance where you can get just 1% down. Typical FHA mortgage is 3.5% down. But you just start to get better rates when you get more of a down payment. So 6.5% is the average, and it's a little bit up. So last month when I did this number was about 6.13. So it's bounced all over the place. And the main reason it's gone up a little since isn't because the Fed raised their rate or rather a quarter of a percent. That was expected. What wasn't expected was the employment numbers, the job numbers, way higher than what they expected, something in the hundreds of thousands higher than expected. So that made it look like inflation isn't tapering off as much as they would like. And if you're watching Jerome Powell, he's the head of the Federal Reserve, who is managing the Fed's interest rate. What he is pointing out as one of the main factors of inflation, and it's something a lot of people don't want to talk about, but it's wage inflation. People making too much money, jobs paying too much, having to compete. Not necessarily jobs paying too much, but having to compete and continue to raise wages, and that's causing wage inflation. Which, of course, if a whole lot of people have a lot more money, then they buy more goods. And when there's a supply chain issue, that affects products and services. Those go up in price as well. All that's connected. So job numbers being high affects inflation in a negative way. So the outlook is that maybe inflation isn't coming down as fast as possible as they would like because of that. So we start to see 10-year Treasury bonds trading higher on that news. And when 10-year Treasury bonds trade higher, mortgage rates trade higher because mortgage rates or a mortgage ends up being part of a mortgage-backed security. They compete directly with 10-year Treasury bonds. So that is what makes mortgage rates change most dramatically, is whatever the 10-year Treasury bond is doing. Okay, so, but mortgage rates are still under 7%. They did get up to about 7.5% in October. Okay, now we're going to get into some data. So this is the February 2023 Trend Vision Report. These are reports that really every realtor has access to. Maybe a lot of realtors don't really look at this very often. I like to run this at least once a month. So the report that I always run for this segment is Sacramento County. I work in several other counties, but I'm just picking one county, Sacramento County, for all single-family residences, 1/4 acre or smaller. And that's just because most homes are on a 1/4 acre or smaller, and the larger the property, the wider the range of features and pricing and all of that. So this keeps it more uniform. So I like to use this particular set of data in order to run these reports. Okay, so this first one is homes for sale versus homes sold, and also pending. And I normally don't talk about the pending part in this report, but I will this month because it's significant. So way over here on the right side, you see January 2023. Something to remember about any closed sales numbers. A typical escrow period for a home sale is 30 days, maybe a little bit less, sometimes 21 days to 30 days. But that means that anything that closed in January was an offer that was made in December. And in November, December, it's holiday season, fewer homes are coming to market. People are super busy. They're not wanting to look at homes. The market ends up being really soft and stagnant during those periods of time. So you're really not seeing a whole lot of activity. And we usually see some sort of not necessarily a dip, but a slow market during that period. So the January numbers really represent buyers who were out in November, December for the most part. So what we have here in we'll start with light green. So that's for sale. And the for sale numbers, there were in this particular characteristic, only 942 homes for sale. You'll see at the peak when the market started getting oversaturated maybe in 2,200 homes on the market at once. Wow. So you see, 1 year ago today, there were 1 year ago in January, um, there were 765 homes for sale. So year over year, that number is up 23% and down 20% month over month. So continuing to go down. Now, solds are definitely different than January of last year. 483 solds. That's not a lot of solds. And a lot of that has to do with inventory. It's just there's just not a whole lot out there, and of course, interest rates. There's fewer buyers out there, but fewer homes coming on market. So the sold numbers, it's 45% down. 45% fewer homes in this particular category down over last year at that same time. And that's 30% down from the previous month, which isn't abnormal typically. I mean, you actually see in January of last year, which was a hot market, it's down below December's pretty significantly, and then you start to see it rising up, and that's what I'm going to expect to see, because what I said that I some of the positivity that I led up to before showing this graph, this line that says pending. These are newly pending sales, so accepted offers. You see that upward curve. That means that there will be more closed sales when you see that February number. A lot of homes closing and essentially selling in February. Okay, so let's go down to the next graphic. I like this graphic just for showing the market what it's doing on average. I don't like to price a home with dollar per square foot. That's what this is. Dollar per square foot. Sometimes people say, "Oh, the home down the street sold for 400 per foot," but it's a 1,200 square foot home. As a home gets bigger, dollar per square foot typically falls. Plus, you all know flipping, right? Flipping homes, or essentially, say, buying a home for 300,000, putting $100,000 of work in, and then selling it for 500,000. That could be the same home, just because dollar the dollar per square foot of the Smith's house up the street sold for 400 a foot doesn't mean yours is. Maybe there's a ton of work that needs to be put into it, and only sell for something like 250 a foot. Okay, so dollar per square foot, though, you see that on average is 304 a foot in January. So it's slightly down from the previous month, which was flat from the previous month. So what we're really seeing there is we're seeing it flattening out. And based on those pending numbers from the previous graphic, I think this number is going to rise in that February number. We'll see if I'm right, see if I'm wrong, but that's what I expect. This is only down 1% month over month, down 7% year over year. I think we're going to see the down year over year on a lot of these continue to rise until it hits even with April and May of last year, as you see where those peaks hit in April, May of last year. April's where the rates really started to rise, and then a little bit of panic hit in at that point, and people were going out and trying to get homes before they rose further. All right, this next page here has two different metrics on it. The first one is whether a home sold over or under the list price by percentage. And you see over here at the peak, 104% of list price, meaning they basically sold the home for 104% of the list price. And then homes were basically overpriced for the market because of rates, and sellers started accepting offers below the list price. And it hit down to 94, and it actually rose up a bit to 95. Now, that doesn't necessarily mean that the market is improving there. It means that sellers are pricing to the market more actively, instead of thinking that they can use comps from 3, 4, 5, 6 months ago and overpricing their homes. The next one here is average days on market. Continues to rise, 51 days on market. Now, that's pretty typical that we see a peak in those December and January numbers. They're just slower months until late January, and that is pretty normal year over year. You even see when it was this hot market last year, sure, only 22 days on market, but you see that was a peak and another peak. I think that's going to go down for February. We'll see if I'm right. Let's see. Let's go to this next graphic. I've talked before. I don't really care for this graphic too much, or this metric. This is essentially the average price of sold homes versus for sale homes, and it shows if homes are being overpriced or what affordability is. And you actually see at the peak, people were the average for sale was under what they were sold for, and that's because of people paying over the list price. Because people are paying under the list price, it's definitely dropping. But now you see there's a slight upward curve here, so that tells me that we're suddenly seeing homes improving in price. And again, I think next month's going to show some positivity. And this last one here is months of inventory. So this is how many months it would take to, at the current demand level, to deplete all the housing inventory. And you see down this hot market, man, I mean, there weren't enough homes on market. They were just all just going away, any sort of backlog in homes, because there was less than a month worth of inventory. And then the rates started hitting higher and inventory started going up, but it's hit a pretty steady little area here around 2. So what does all this mean? Well, let's talk about that. So there you have some real data instead of speculation that you might be getting, or maybe just anecdotes from people regurgitating what maybe their own thoughts might be on the market, things they've heard. Now, something to remember: every year it seems that in November, December, we see this market lull. People just don't go out and buy homes during the holiday seasons as much as they do the rest of the time of the year. There's a couple of reasons, maybe even more. Weather's usually bad. The holidays, they're very busy. People are going out of town. People are going to holiday parties left and right, especially in December. A lot of people don't put their homes on the market during that period. So there's a lot of reasons why you see that. And then we have to wait until late February just to see some real market data where the housing market is rebounding, if it is at all, or really where the market health is. Usually takes well into January before people start going out and buying homes again and new homes are hitting the market. And because the typical escrow period is 30 days, maybe a little bit less at times, then it takes quite a bit longer for us to actually see that data. So a lot of times we don't really see how the market is looking for the new year until closer to the end of February, early March. So something to always consider that time of year when you're looking at the real estate market. So we're seeing some positivity and some anecdotes on my own. My last 3 listings all had offers within the first week, and they ended up being offers that my clients either accepted or countered and ultimately did accept. And my most recent one, which was just a few days ago now, just this past weekend, it was perhaps the busiest open house I've had since maybe 2018 or 2019. That's something to remember. In between 2020 and 2021, there was a period of about something like 15 months. It was March 2020 to June 2021 where open houses were not allowed. But that still left June through December of 2021, which was a hot market, and January through April of 2022, which was a hot market. This was easily the busiest open house I've had since maybe sometime in 2018, 2019. So that was something that was pretty extraordinary. But from other agents I talked to, they had really busy open houses. So all of a sudden, buyers are out looking at homes. Now, inventory is low. So the amount of buyers looking at homes is still smaller than what it used to be. There's just less to look at. But they're coming out and they're buying homes. And we're starting to see an upward movement. That particular home, we ended up getting 6 offers, which is great because a lot of homes weren't even getting multiple offers at all. If they were selling, they were getting 1 offer. We ended up going through counter offers to several of the prospective buyers, and they sent over their responses. And we ended up getting a little bit higher and better terms for my client, and we're significantly over that list price for that sale. So market positivity there for your sellers. On this particular home that I'm talking about, it was in great shape. You walk in, move-in ready, updated everything. Beautiful home. Those are the kinds of homes that are selling more quickly. Always really has been that case unless you price it to the market. Of course, homes that aren't as updated are selling. You just have to price appropriately for that. And you got to use data for that. Just because the Smith's house up the street sold for whatever and they had updated everything, but you have the white tile kitchen cabinets that are oak, white tile countertops, just older carpet, whatever it is, it's not as modern. You're simply not going to drive an emotional response to buyers the way that other house did, and it's simply not going to sell for anywhere near as much. So just always remember that you really have to take a good look at what the actual comparables are before pricing a home. And overpricing usually ends up with you getting less of a sales price if you had priced appropriately from the start. Homes that have been on the market for a while end up getting lowballed later, even if they do price reductions. So make sure to look at data there. I hope that was some good positivity for you. It's still a good time to go out as a buyer if we're seeing this market continue to rise, or at least be stable, then we could be seeing a rise down the road. There's lots of economic data that could happen to change that. We've been in a very volatile sort of economic market when it comes to inflation and interest rates and all of that. They've been bouncing all over the place. But if you're a buyer, I would suggest you get out sooner than later. It doesn't look like, unless there's an extreme economic event like a recession or some new data that really drives interest rates really high, that prices are going to move down dramatically more than where they have been. Of course, if interest rates rise, that takes away your affordability. So it's a good time right now for buyers to get out there, and really more of a positive time for sellers. So if you're looking on getting your home ready, it's a really good time to push forward with that. Spring is usually a great time. March, April, all the leaves are on the trees. Looks great in photographs. So if you have any questions for me, please reach out to me anytime. I'd love to take a look at your home to let you know what I think, what you may need to do to maximize your ability to sell and sell quickly and sell for the highest dollar amount or whatever your goal is. My info is on my YouTube page where I put this video, and if it's shared somewhere else, you can find me. Thank you so much. I'm Brendan Mohr, the Realtor.